The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 5th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. If you can't get to the phone, you can send me an email, steve@tfnn.com. Just inside that heading, go ahead and put radio show question, and of course inside the Tiger's Den. Any ping will do. So let's go ahead and get this show kick-started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 4 points at 21,475. S&P is up 3. NASDAQ Composite up nearly 1%, up 51 points, trading out at 56.47. Russell 2000 off 8 points. Semiconductors up nearly 2%, 1 7/10%, trading up $17. That's trading out at 1038.18. You've got the Wilshire, that's kind of flat. Trannies are kind of flat. VIX index down 10 cents, trade out at 11.12. Gold is up $3. Silver is down 11 cents. Light sweet crude off $1.71. Leading the charge here to the upside. Of course, you would expect this, seeing that the Index 100 is up nearly 1%. You got Priceline up $18, Amazon up 18, Intuitive Surgical up 14 and change, Google up $12 and change, Regeneron Pharmaceuticals up 8, Biogen, the IBB, that whole sector is still on fire. We know that's headed higher. To the downside, you've got the auto parts companies, AutoZone, O'Reilly, Advanced Auto Parts. They're all getting creamed. Really getting creamed, though, is O'Reilly Automotive, down 19% or $41. Of course, AutoZone is off $51. That's only 9% to the downside. And Advanced Auto Parts is off 13%. Alta Beauty Salon down a little over 2% or $6. Simon Property Group down 3.5% or about $5 out there. Buffalo Wild Wings. Biz got the hot sauce going. $4 to the downside, off $3. Hope everybody out there had a great July 4th weekend. A little bit of time off helped. Would like to have seen all of Monday off, so to speak, but the markets were open till noon out there. And, for the rest of the week, they're open nonstop. Well, nonstop, so to speak, if we're taking a look at the equity futures contracts. And that is where you and I are going to begin our afternoon. We're going to take a look at we should take a look at what's going on inside that NDX 100 or what's going on inside that NQ contract out here. So let's start off by taking a look at a 30-minute chart out here. You had a beautiful bullish signal that took place at about 10:30. Was it 10:30? 10:30 this morning. You might say, what do you mean, Steve-O? Well, let me explain to you exactly what I mean by a nice bullish signal out here. Take a look at that price oscillator in the very bottom panel of our screen out here. And when that gets to the zero line, right about where my crosshairs is at, so to speak, when we get there, when it gets right there at this stage, what you should be anticipating is that for Stevie's red line that's on the chart, that oscillator and change line, and price to eventually go ahead and converge. In this case here, we had price kind of pulling away, but you still anticipate that we're going to see a little kiss and tell out here. And that kiss and tell did happen at 10:30. When price came back, met Stevie's red line, it acted as a trampoline. That said, prices were going to go ahead and continue higher. So if you were an intraday trader and you saw this and you were still short from an intraday standpoint, you would have known to get out of Dodge because that was just simply telling you prices were headed higher. Now, as prices continue to move higher to 30-minute chart, is there anything that you and I are seeing that suggests that it's up at a resistance level? There's not anything that I see on this 30-minute chart. So let's go from 30 to the 120-minute chart, try to go figure out what it is communicating to you and I. Let's go ahead and pull this over here. And as we take a look at the 2-hour chart, here's what we noticed is that last night, well, actually was on Monday. It was Monday. Let me get my crosshair going out here. As price was moving back at 2 o'clock in the afternoon, price was moving lower, doing less relative energy out there. And price was completing an A to B equals CD to the downside. We had beautiful patterns out here. And then it was at about what time? At about midnight. Last night, just as all the fireworks were going off, there were some fireworks inside the NQ. The bulls came in, nice little bull sash candle out here. The 2-hour chart says price wants to head higher as well. Where could this head to? Hey, there's no reason for price not to get up to 57.71. You're only at 56.53. That's another 120 points to the north inside of the NQ. Now, that's what the 2-hour chart says. Let's go see what the 5-hour chart has to say about this. And as we look at the 5-hour chart, well, guess what we had? Price was moving lower, doing less relative energy. This says that we should see the NQ head up to 56.90. That's another 40 points before maybe it runs out of a little bit of steam out there. But the real deal is going to come from that daily chart. And as we take a look at the daily chart right now, we don't know whether this is just a little counter trend rally or is it something more. We do know on a daily basis, this is what you and I know. We know that Stevie's red line is 57.30 and change. So put that on your notepad, because if and when you see price get above that and you are still short the NQ, you got to ask yourself one question. Why? Because then things will have switched to just simply all-out bullish. The NQ will go ahead and get back to its highs. It will get past those highs and will just continue motoring on as if it were part of the motor city out here. But right now, 57.30 is a level you want to be watching. Now, you've got a bullish reversal signal today. After we took a look at those A to B equals CD patterns, those were on the short-term charts. Here's your A to B equals CD pattern that came into effect. You get a nice reversal here. This, folks, is what you call is a classic Gartley buy pattern. And when I say classic, I don't mean like a 1967 Corvette or anything like that. I mean the type of Gartley buy pattern that you want to be all over. Because Gartley, the beautiful thing about Gartley is when you've had a huge move in one direction or the other, it is looking for either the Gartley buy or sell. In this case here, this is the first A to B equals CD on the daily chart that we have seen on the NQ in quite a while. And this is just an all-out screaming at you, I'm coming at you, you being the bulls out there, buy pattern. That is what's going on the chart for the NQ. Now, look, this is a daily chart, so it's really going to all be about the end of the day out here. But if it finishes like this or finishes higher, there is only one message that is coming to you loud and clear. And that is H.M. Gartley is saying, buy, buy, buy. And I'm going to say goodbye to you. We'll see you in just a few moments out here. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 3 points, S&P 3, NDX 100 up 56 points out there. Have a request that came in, a couple of requests. One is from Dave in Germany. He wants to take a look at J&J, Johnson & Johnson, out here, and is looking at a candidate for a short position out here. So let's go help Dave out. And says, I'm looking to potentially short J&J around 136, targeting the 116 area. So we take a look at 136 out here. I like that. If in fact this is a short, then I like your targeted area out here. And what I would be looking at for me would be price getting up to the 135 level. That would be Stevie's red line. If it gets to 136, I think that that's not a good call out there. Price should not be able to bust through that level of resistance. You want to see price get up to it, test it, and reject it. So 135 is showing up on this tool, that chart, that's Stevie's red line. Let's go over to our other daily chart out here, Johnson, golly, see if I can actually type here. And for Johnson & Johnson, oh, it was already in there. I already did type. This says 135.02 would be the top of its daily box. So this is very nice out here because we have the TAS market profiles. And at the 135.04, we had Stevie's red line. 135.02 is the top of the daily box out here. So, Dave, this is really a simple setup. If you are correct in that this is a short, price should not get over that level. Then you've targeted the one, if you will, the 116 area. And 116 is going to get you into, I don't think 116 is a, let me make sure that was the price that you looked at. Yeah, you said 116 to 120. Okay. Well, what we're looking at here is a nice little breakout with some volume. In fact, that's an island bottom in Johnson & Johnson. Hold on. Hold your horses. Let me see if it actually is. The high here, 124.31. It is. Son of a gun. Hey, Dave. Dave, did you see this? So what you've got inside Johnson & Johnson is actually an island bottom pattern that formed out here, and that formed between the time period of April 17th and May 15th. It's a very bullish style pattern out here. So I don't know. I might have to give you the Lee Corso not so fast. But look, I don't want to take you away from a trade that you've been looking at out here, and that says watch that 135.02 area. And if you start to see price back down from there, then maybe you've got an A to B equals CD to the downside. But I don't see price getting anywhere below that breakout from May 15th out here. Now, the beauty would be if this gets down to 116, you're down below that breakout area, and then you probably have an even larger move to the downside out here. So at this stage of the game, Johnson & Johnson as a short, not so sure. Watch those levels. Don't get into it now. Watch those levels on a potential counter trend rally. Let's see. Out here, there was a question. Kay writes in and says, Steve, listen to your show all the time. You don't talk about digital currency like Bitcoin. And basically the question is, which currency is the strongest currency? Whoa, that is a loaded question. Here it's talking about gold. It's talking about the euro. Which currency is the largest currency, or the strongest currency? To tell you the truth, with regard to currencies, I will tell you what I believe is the strongest currency in life, the strongest currency in the world. And I can prove it. The strongest currency is the currency of trust. It is trust. Now, I know we can't come to a stock chart and take a look at it, but if you're asking me what's the strongest currency, and you can apply this to everything it is you do in life, the strongest currency is trust. The reality is, if you didn't trust me to make calls and judgment calls on reading these charts out here, you wouldn't give me a second of your time. Whether you agree with me or not, it's still a matter of whether you trust that I really do have your backs, that I'm making honest calls with regard to interpretations about what the market is doing out here. You want to talk about trust? I don't know how old you are, but for most of you out there, I promise you that your parents taught you to never accept a ride from a stranger. Did they not? I mean, I don't know how many of you have kids or grandkids, okay, but don't we teach our kids not to accept a ride from a stranger? Don't we do that? This is how valuable and this is how fast the speed of trust works. This is how you want the real digital currency? It is really about trust. Yet most of you out there, including myself, have taken rides with Uber or Lyft drivers out there. So the exact thing that your parents or grandparents, or you teach your kids or your grandkids, in life, take a look at how that has grown exponentially and continues to grow exponentially, right? And you all do it because of the speed of trust out there. So with regard to all these currencies, which one? Yeah, I think patterns. You and I just talked about the Gartley buy pattern. So this is how I'll go ahead and pull it all together for you out here. With regard to trading currencies, commodities, equities, it doesn't matter what it is you trade. The patterns are the patterns. The chart, the symbol is agnostic, but the patterns are there. When you begin to believe in those patterns, and you'll believe it, and the faster you do that, that speed of trust, as soon as you see those things come into play, you will then go ahead and take action, no matter what it is. So in the indice that has sort of gotten beaten down out here, right, which would be the NDX 100, which would be the semis out there, if those buggers are in fact forming Gartley buy patterns in a move that was huge from lower left to upper right out here, that is the type of speed of trust that you want to be able to have in your trading. So it doesn't matter to me what system it is you use. Once you use it and you just simply use it and those signals occur, then you don't have to look like a deer in headlights out there. You have that digital currency, the speed of trust. It is on your system. There probably is no better business out here than these markets. So I have to say that what you want to do is you just simply want to learn these patterns. They can be Tom O'Brien's patterns, David White's patterns, Basil Chapman's patterns, Larry Pesavento's patterns, Steve Rhodes' patterns, your own patterns, some combination thereof, and just simply understand how well they work out there, and you will do just marvelous inside these markets. But you wouldn't listen to me if we didn't have that digital currency of the speed of trust. And I can promise you one thing. I've got your back. Either bullish or bearish, it doesn't matter to me. The charts are the charts, and we're just simply going to go ahead and read them as we see them out there. So thanks for the question. I hope that sort of answered your question. But if you want a specific question about a pattern inside a specific currency, go ahead and write back to me, and we will definitely take a look at that. But speaking of currencies, why don't we actually just go kind of look at the currency market out here? Of course, one of those currency pairs that you and I want to look at is the Japanese yen out here. What in the Sam heck is the Japanese yen doing? And the reason that you and I want to take a look at it is because we still believe there is a correlation between the yen and Goldilocks. Whether it's that same, well, let's go prove that point out here. I don't want to just say it and then not to actually be able to prove it. So let's go quickly pull up the 10-minute chart. Let's just make sure that correlation is still in effect out here. Where is that yen? We're going to pop it up on our screen. And as we go to this break, think about the most valuable currency. It's called the speed of trust. Looks like the correlation is still intact for gold and the yen. We'll go look at them when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So before we went to the break, we were throwing up the 10-minute chart here, the top panel that you're looking at if you're watching us on Tiger TV, 10-minute chart for gold. Center panel is the 10-minute chart for the Treasury bond futures. The bottom chart is yen futures. If we use the currency pair, I'd have to kind of flip it, and then I would have a 15-minute delay. That doesn't really work. That'd be off by a bar, basically. We don't want to do that. And we can see that the correlation is really still pretty strong out here. Remember, it's a directional correlation. It's not a pip for a tick kind of a thing out here, but it is a directional correlation and is still pretty strong. So then that being said, as we go back and we take a look at our daily chart here for the yen, we're going to see, and when it's moving higher here, it's getting weaker. So gold and treasury bonds like a stronger yen. In this case here, as it's moving higher, this is the actual currency pair. So here we have the 15-minute delay out here. You can see that price ran into, well, took out one level of resistance, did this here on Friday. That's a little descending trend line out here. That's from the highs in January. So that trend line was taken out with a wide-ranging bar. That ran right into another descending line, happened to be the channel lines. The difference between a trend is we actually use the top of the candle or the bottom of the candle, and we just connect it to other tops and bottoms of candles out here. The channel lines, you and I are just looking at what is called the essence of price, the actual body of the candle out here. And so those are the yellow diagonal lines that we see on our screen. So price, you can see, is stalled at a normal natural resistance area. But if price is able to close above this level, price will then, or should then, I'll just put this on a weekly chart, we'll get more data, you can see the longer term trend line. So the longer term trend line, which takes you back into the 2015 level, that would then become our target. Now it is hard to see unless that correlation comes unglued. Gold doesn't have to move down a ton, but it certainly is not likely to move higher. The same can really be said for the T-bond futures out here. So price, as we know it right now, has run into a resistance level. Hasn't given us any indication that it truly is resistance. We would know that because we would see some type of bearish reversal signal form. And we don't have that out here. Yeah, someone could say, hey, but look at the candle session from July 4th, and that was a hanging man. And you know what? You are good. You are good. But here's the deal. If you're going to ask Stevie, does he believe, the Japanese do call that a bearish reversal candle. And it is, and sometimes it can work. But the percentage of times that it actually works and calls a top are slim. They're not none, but they're slim. They're slim pickings out there, and I don't like slim pickings. So as Japanese reversal stick candles go, I don't like that one. I don't. You take a look at that candle, just the formation of it. You know, isn't the last gasp? I don't think so. In that wide-ranging bar that we saw out here on July 3rd, right, on Monday, that's a big wide-ranging bar. That has a lot of meaning. Remember we talked about right back here, this candle that formed on June 19th, and we saw four candle sessions that traded within the body of that candle. I said any close above that is a breakout, a continuation candle. That's called the rising that's called the rising 3 out here. Well, looks like that's what's really being set up right now inside of the Japanese yen. We just take a look at the bodies of the candles out here. So what this really looks like to me at this stage of the game is that the yen wants to go ahead and try to bust them further to the upside out here, and that's not going to bode well for Goldilocks, silver, and or treasury bonds. Now, if we go take a look at gold. We'll pull that up. Oh, by the way, this is the Apple chart out here. Hey, the price we watching inside of Apple is Stevie's red line. It is really very simple. That's at 145.01. As we speak, that number is going to change, but the 145 area, 144 and a quarter, you close above 145. That, because of its weighting inside the XLK, inside the QQQs, that'll be another signal it's ready to move. And when I say move, we're talking into 156 type area out there. But we're not really talking about Apple right now. What we're talking about is Goldilocks. So let's go take a look at gold. Let's take a look at some numbers or patterns, see if there's anything forming inside of gold as we take a look at the August contract right now. And the answer is no, there's just not anything that you and I, it has made a move of a move. It's gotten back to the swing points out here from back in May. So it has at least done that. But you got price trading below Stevie's red line at 1242.30. That's where things could get interesting if we could see a close above that. That's another $40, $41 to the upside. I don't think we're going to see that today. And so this just suggests that gold wants to continue to move lower out here. And it's not going to get bullish until, from a daily perspective, until we see that oscillator and change line get taken out. You have a falling price oscillator below zero. That just says lower prices And lower prices, may just take us back in the 1,200 area, back into the swing points from back in March of 2007. If we look at silver out here, let's go take a look at high-ho silver, see what its message might be. Look for some type of pattern out here. So we'll put up the current silver contract. Silver. Is July still the current contract? Maybe I need to, yeah, it looks like it is. 1584, is that what we're trading at right now? Yeah, we are. And as we take a look at it and we look for patterns, nothing out here to hang our hat on. This actually looks like an A to B equals CD to the downside. So inside of silver, let's go measure that A to B equals CD pattern out here. That'll take us into, let's see, 1774. Yep, there's the number. And the 1-to-1 projection is 1508. You're at 1584. So maybe at 1508, 1435, we'll go. It is September, Danny. Yeah, I can't, thanks. I can't change it on this chart pattern out here. But even if we go change, thank you. But if we go update this contract right here, it looks to me like August is still trading though. But if we take a look at, here's the A to B equals CD, the A to B equals CD down pattern here. We can go ahead and punch that in. We should come up to approximately the same level. But let's go take a look at it. Let's give you something to try to hang your hat on. And as we take a look at it, the 1516 maybe, 1444 maybe. I need to put on the continuous contract now just to see where the heck this thing might be trading back into. So let's go ahead and put that A to B equals CD pattern out here. We just want to see if there is some type of set of swing points that this is giving us a price target on as we pull it back. And sorry about that, folks. Now, that was really a small A to B equals CD. The problem is that if you get down below December 19th, that would be a larger A to B equals CD pattern to the downside out here. And it really, what it would say is you go back into the December 2014 area into the $13 range. But we'll see if this swing point from back in December 2016 area, if that can hold. And that's going to be in the price range of about $15.67 out there. Thanks for your help there, Danny. So what else do we want to look at? So that kind of currency-wise, because we did have a question about currency. If we go take a look at the euro, get a feel for what the euro is doing. No, this is actually, so let's pull this chart. Let's put this on a larger term time frame out here. Here is the descending, right? We were taking a look at descending price channels inside of the Japanese yen. Take a look at this descending price channel inside of the euro. Takes you back into the 2008 time frame out here. Prices made a counter trend rally to that midpoint. That could be it for the euro. The euro could be headed lower, back down towards par. Steve Rhodes with TFNN. We'll be right back.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So before we went to that break, we were taking a look at the euro, and this happens to be the weekly chart for the euro. So the very first pattern, the pattern that stuck out to me when I took a look at this chart, and was why I drew it in here, was the descending price channel that price has been trading within. Now, when you draw your price channels, what you want to do is you want to try to identify the largest number of co-located, that means either opens or closes, of the body of the candle, doesn't matter which it is. And once you get the largest number, that sets your line, so to speak, your top of your bottom line out there. And that, in essence, is what I have visually drawn in here. And we can see that where price has moved up to in this little counter trend-ish type rally is back towards the center line of that descending price channel. Now, that's a diagonal type potential resistance out here. We can also see the consolidation that the euro has been in for quite some time. We can see that the bottom of the consolidation, which began back in March of 2015, here in essence is your consolidation type box. And the nice thing about a consolidation box out here is that any break to either side gives you a measured move price projection. For example, if in fact the euro were going to continue to get stronger out here and move higher, then that would say, hey, you want to go to Italy right now this summer. And if it does, and the reason why I would say that because you can see that the measured move price projection actually takes you up to the top of that descending price channel. Yeah, that's how cool. At this stage here, we don't have any reason to believe that the euro is doing anything more than consolidating, because it has neither broke the top nor the bottom out here. Now, resistance area, as far as the top of that consolidation level, let's go ahead and mark those off. We can see this is a weekly chart, by the way, that you and I are looking at. We can see a number of shooting stars. We can see at least 2 shooting stars. If we go ahead and we mark those with let's mark those with yellow lines. Here's the one that I would be paying attention to. This is the weekly shooting star, the opposite of the hammer from the week that began May 2nd. That says horizontally 116.16 is a level of resistance. Back here in October of 2015, at a price below that, 114.95. That's another shooting star out here. So you can see we're really right in this area of some significant resistance. And if you come back here you've got nice bearish engulfing back on May 18, 2015. So you can see that all the sellers in the euro, these are the yellow lines out here. You can see where we are lined up. This is where price has really run into resistance. So the nice thing is that you know where resistance is at by looking at these charts, whether we use the diagonal version of price channels or whether you use horizontal areas of identifying where the cavalry is at, in this case here, the bears in this trade. And that is because if this 116.16 level were to get taken out, you would know how to project where price is headed to. At this stage, what you know is this is significant resistance. And until taking out, that is how you have to go with it. So if you are a person that wants to short the euro out here, then what you just simply do is go down into a shorter term time frame. You go from a weekly maybe to a 60. In fact, let's go take a look at, and it looks like that opportunity would be now we can see a descending price channel just simply on this time frame, right? So if we were to draw that pattern in here, at least this is sort of what I see. I'm going to start from right here and draw down. Then we go well, okay, then we kind of come back into about this area. It happens to be green. You won't mind that it's green, right? Yeah, we needed more colors. We like colors on our charts out here, but there's your little descending price channel. So if you were looking to short this currency pair, you'd let the euro bounce a bit more, get up into the top of that descending price channel area before you would go ahead and fire away. That's just one quick set of simple patterns out here, but you do know that the euro has hit some fairly stiff resistance out here. So if this is going to get weaker, that would say, because it's 56% of the U.S. dollar index, that the U.S. dollar should go ahead and get stronger out there. And we already know the yen is suggesting that it wants to weaken further. So if it wants to weaken, that'll put some more fuel into King Dollar. And speaking of the king, Elvis Presley out here, let's go see what the U.S. dollar index is actually doing. Let's go see if we can identify any patterns out here. I don't know if we can, but let's go see if there's any signals out here inside the U.S. dollar. I'm going to go ahead and go with the continuous contract as we speak right now. And as we speak right now with regard to the U.S. dollar index, it did give us a nice little TD combo 13 count a few days ago. And right now today, price is trading above Stevie's red line. That says there's more counter-trend rally in the U.S. dollar index. It's got to take out the 97.50-ish area. And if it does, then you could see price move up into the 100, back up to the 100 range inside of the U.S. dollar index. Right now, you've got the Dow is flat, the S&P is up 3 points, so not a ton out there. Let me just check my. I don't have to check my messages. Somebody may have already written in and has said, hey, what's going on inside the mining sector out here? So if we look at the GDX, trade out at 21.56. It's flat, up 8 pennies right now. And let's go change this back to a daily chart. Get rid of that 60-minute time frame. U.S. dollar index is traded right back into that sign of strength, that little gap out here. It's actually trading below that area, and looks like it's headed for at least the swing point from the trading day of May the 4th, the high, which is 21.31 out here. Let's see. Was the B point taken out with volume? The B point, well, I don't know. We have to add volume on the chart out here. So if we do that, the swing point we were looking at, the B point of the A to B equals CD, would be June 20th, 31 million shares. That was passed with 43. Oh, that does not bode well for the bulls inside the mining sector. So you now have a confirmed A to B equals C to D to the downside out here. Your A point I'm looking at is June 6th. Your B point is June 20th. That retracement out here looks like maybe June 23rd. Maybe it was June 27th. Either way, looks like the GDX headed back to that swing point from May 4th. You have a 1-to-1 projection, confirmed projection of $20.70. You're trading at 21.57. So that should answer the question for everybody out there. Which side of the trade should you be on when it comes to the mining sector out there? And if we go take a look at the XAU, we go ahead and see what it says. You can see price here trading below Stevie's red line. There is a possibility, I must say, that today happens to be wave number 7. It's either wave number 7 or it's wave number 3, G and C to the downside out here. But boy, they've got to confirm this can extend for days out there. Just because you're in wave number 7, you need to see a confirmation. The earliest that could occur would be tomorrow. But at this stage of the game, I think, sitting on the sidelines, or take a look at the individual equities. That's a different picture, perhaps, than the entire sector out here. And that's for your XAU and GDX. Danny in Atlanta wants to go take a look at platinum, so we'll go ahead and fire up platinum on my screen right now. I haven't checked into this. Doesn't look like this must have switched over to the September contract as well. Is that what you have, Dano? And if so, then, no, it can't be September. What contract is it, Danny? We'll take a look at it when we get back from this break. Steve Rhodes with TFNN October. Thank you very much.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Flat Dow, S&P is up 3, NDX 150 points. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How was your 4th of July holiday?
Oh, it was excellent. Steve, I'm glad to hear yours was as well.
It was. And we're back at work. Now, you are, folks, you want to listen in on this conversation here, because if you wanted to be a farmer, there's no more successful farmer than John from Philly. So tell us what's going on in the commodity sector out here, and you've caught some big moves to the upside.
Yes, Steve. The wheat, lead, the corn, and beans have surged higher the past 7 calendar days, and I'm wondering if you could pull up the Dees corn futures and just give me the parameters that appear to you, given your work and your parameters. That'd be very helpful. And just for full disclosure, I'm long, and we're currently facing a weather threat to the corn and then the bean market. The wheat market's already suffered a crop loss up in the northern plains. And that same dry weather now is starting to impinge upon the corn market out there in that section of the country. And the forecasts, and I repeat their forecasts, it's not yet the reality, the forecasts are for the weather threat to intensify. So it's dangerous trading with changeable forecasts and the actual weather. But I'm long and wondering what your technical targets might be, please.
Yeah, so I'm going to focus on the 60-minute time frame because that's the one right now that is providing you with the most information for you to pay attention to. And on July 3rd, on Monday, now I don't have price on the chart right now. Go ahead, folks. For those of you watching on Tiger TV, I'll add the price back to it. But this will help, without seeing the price, this will help to cement the read on what this set of profiles is providing to you and I. So back on July the 3rd at about 8 o'clock in the morning, there was a brand new 60-minute profile that formed out here. And it was pretty narrow profile, went from about 399 at the top down to about 396 out here. But then there was a brand new profile that formed at 1 o'clock in the afternoon on July the 3rd. And that profile enlarged, so to speak. Not a good word, not probably a word out there, but it got much larger out here. The beauty about that secondary profile was that the center of the box was much closer now to the bottom of the box, saying that you were going to see price get up to that 407 area. And 407 is kind of just a small resistance zone out here. So you have a nice little bullish message. In fact, what price really did after that profile formed was price pulled back over the last couple of days out here and tested a level of support that should have held 396 and change out here. So price now is on its way back up to the 407 level. And if you take that out, everything gets back in line. Looking at a 60-minute chart at 240 daily and weekly, and doesn't show any signs right now of doing anything other than continuing to move higher. Now, where higher, you got to go back to the swing point high from June 6th. That's what you would take a look at. That's in the 422-ish type area. And we just have to keep going back and take a look at these swing points. But from a short-term perspective, you actually got the pullback that you either did or didn't want to see, but you really got the pullback of a test of support. It held, and now it's headed back to the 407 level. That's what I see on the shorter-term time frame.
Steve-O, thanks so much. I do appreciate it, and I appreciate you highlighting the NDX pattern this morning. And can you just close up with the S&P futures, how that looks? Because that pattern is different.
It is different. I'm waiting for what needs to happen for the S&P to give us the full-out bullish message, folks, is a close above 2438, 10 points further to the upside. And if price is able to take that out, it's giving you a message that it also wants to move higher. Folks, thanks so much for joining us. Stay tuned. David White, your favorite polar bear and mine, is up next. After that, you've got the Tom O'Brien Show from 3 to 5. Have a wonderful Wednesday. We'll see you on terrific
just started
Thursday.
His brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.